Hi, everyone. I think I might kick off in about 30 seconds here just to let a few more people join. Looking forward to kicking this off soon. Okay, I think that's about 30 seconds. Let's kick this off, guys. So welcome to everybody to another InCorp Lunchbox session. Today we're covering fintech stacks or finance tech stacks. So for those of you who don't know me, my name is Aaron. I'm a director here at InCorp Advisory. I'm co-heading up the outsourced finance function services division. In my spare professional time, I sit in a committee where we're in a tech accelerator. We're very much focused on accounting tech only as well, starting with the validation of ideas, taking that all the way through to the commercialization of that software. Secondarily to that as well, I am a subject matter expert in an AI, focused primarily on accounting as well. Really excited to see where that goes. Talking more about InCorp as a whole, though, I'm one of many different divisions here at InCorp. We partner with businesses all the way from incorporation, taking that all the way through to exit. So stuff like corporate secretarial work, accounting and finance work, taxation services and advisory, assistance with your research and development incentive claim, where you have it, all the way through to audit and assurance services too. As far as our presence goes, not only do we have presence in Australia, but across all of Southeast Asia. For those of you who follow us, pretty cool thing to announce now that over the last week or two, we've been able to secure an office in China. So very exciting times for us. Moving on to the finance tech stack part of the presentation though. What is a finance tech stack? So a finance tech stack is a combination of tech-driven solution or apps to drive a business's financial operations forward. Now, I think one thing to note is that there isn't a no one size fits all approach for tech stack, right? And the reason for that is because businesses differ in size, they differ in complexity, they have different growth plans as well. If you went into Xero today, there are 20 different, like as an example, if you went into Xero today, there are like 20 different apps you could look at when you search for payroll. That's because they're looking to serve a different niche of the market. It's probably pretty well documented what tech can do for a business. But just to recap, you get increased efficiency from tech, right? So your team will spend less time doing processing. You might be saving a head or two when you have the right efficient measures in place. As well as that as well, if you've set your app right properly or your tech stack right properly, automation leads to a lower error count too. With a lot of the apps that you can use in today's market as well, you get better visibility. What I mean by that is these apps have reporting tools now. So you can actually tunnel into these apps and sort of look at what work is being done, where your team is at with the process, where things could go wrong before they actually blow up in your face, and so you can address them immediately. With those two things in mind, if you can manage your risks and your team still has the capacity to grow in terms of, I guess, additional workload, that's basically how you scale, right? So when we look at the components of the fintech stack, look, I'm going to start pretty basic. This is a lunchbox session, so I'll talk to 4 pillars. There are far more that you can be looking at as well. But let's start with payroll. So we're talking about things like ensuring that you pay your wages on time, paying your super on time, the ability to easily onboard and offboard staff, rostering and timesheets, leave management too. Spend management. So we're looking at credit cards, accounts payable, and expense reimbursements. Management reporting and financial analysis. So forecasting and budgeting. They're not just the one budget or forecast, but the ability to, I guess, create additional scenarios and scenario play. For example, your best case, your worst case scenarios too. and being able to flick them on the fly, KPI reporting too. And then for those businesses that comprise of multiple companies or multiple businesses, the ability to consolidate all of that data together for a consolidated report so you can track how the business or group as a whole is going. And finally, accounts receivable as well. Basically, the more payment options and better data you can offer your clients, the more likely that they are to pay you on time. On-time payments leads to better cash flow. Better cash flow gives you the ability to deploy more capital, growth capital in most circumstances too. The cool thing about Xero, which is who we're partnered with, we're a platinum partner, is that you can, as a small business, start with Xero. It can do a lot of that work for you. It's generally quite manual, but it can get it done. You can do your payroll through Xero. You can process your bills through Xero. You can get some basic reporting out of Xero. There is an accounts receivable function within Xero too. As you grow though, Xero, because it is a manual processing system for a lot of this, right? You can look to leverage off apps and technologies to, I guess, capture a much wider load of transactions by simply offering additional automation. So with payroll, for example, we're using apps that can capture some 500 plus employees and where that data and work is done within the payroll system, but then that data then gets pushed through into Xero live so that you can get all of the other reporting that you would need to be done out of Xero. So things like payroll tax, income tax, all your other compliance measures such as activity statements, all that data still finds itself into Xero so that you can do that. So maybe let's look at an example. So spend management was one of the components I talked to before. We had a client come to us with some 400 bills they needed us to process per month. 400 bills, that's probably 400 suppliers. 400 suppliers is a lot of relationships to manage. These suppliers come to you chasing bills and statements. They're coming to you sort of asking for changes in bank details when they change their bank details. If they rebrand, they're asking for changes there, changes of address, changes of emails. Seems like a full-time job to me. And in some cases, it probably is. What we ended up doing instead was we worked with that client to put a team together rather than just having one person having to manage that all. You have a bit of key person risk, right? When that person goes on leave or if they burn out and leave themselves, you're in danger of your supplier risk management, right? So we ended up putting a team together, rostering team members on and off in any given day. And we sort of managed tasks through a task management system so that if a task couldn't get done over the course of a single day and another member had to be subbed in or rostered in, those tasks could be picked up quite simply because there's visibility that needs to be done by another team member. It also gives the client the ability to, I guess, if someone goes on leave, as I said before, we can sum somebody in to do the work. We have backups. Imagine having to process 400 different bills manually. Probably a bit of a nightmarish, once again, sole person job. But what we leveraged off instead is an OCR tool. What OCR tools basically do is they look to scan an invoice. It comes up with all the pertinent details that you need to normally put through a Xero bill or a Xero entry, right? Things like the supplier name, things like the description of goods or services that were provided, the due date, the invoice date, all the different amounts of GST, total amounts, sub amounts, that sort of thing. And I guess with automation there as well, as we talked about, it reduces manual input risk. The difference between a $200 bill and a $2,000 bill, if it's entered by mistake, can be quite costly. Imagine with a 400 bills, you have a CEO who used to, or a CFO who used to have to approve every single one of those 400 bills. A massive time sink, right? So with a triage approval system, especially because if you've got 400 bills, you likely have multiple teams or multiple departments in play where, they're the ones that are maintaining those relationships with suppliers. They're the ones driving the need for services and suppliers. So it likely should be those departmental heads or divisional or team heads who likely should be approving those invoices that are attributable to those teams and departments. So what we did is we used an approval triage system such that the right bills were going through to the right team members for approval. It took a lot of approval load away from the CFO, and as a result, the CFO gets his or her time back, right? You also have the ability with these systems to escalate, I guess, larger bills, like let's say it's $20,000 plus. You can escalate that bill for CFO approval because that might have a dink on cash flow. And also with this client, they were multinational, or at least they were multinational with their suppliers. The majority actually of their bills were actually international bills. If you've ever had to work with a big four banking system, it's a bit of a nightmare when it comes to international bills. Firstly, a lot of you might know Xero insofar that, you know, when it comes to Australian bills, you can batch pay them out of Xero and then put a batch payment order through to the big four banks so that, you know, you hit approve in the bank and the entire batch gets paid. You can't actually do that with international bills, at least the last time I checked with most of the big four. You actually have to key in for each supplier in each instance the amount you wish to pay. So that batch payment facility or ability is taken away when it comes to international bills. Secondarily to that as well, with an international bill, you have to, generally speaking, if you're only using an Australian bank account or that's your dominant currency, if you're looking to book a bill for payment, you also have to lock in an FX, right? With the big four, the way they do it is, you know, you have until close of business to approve that bill for payment. If you don't approve it by the close of business, what ends up happening is that payment expires. You then have to go back to your accountant or your accounts payable or your bookkeeper to then re-upload that bill for approval. And once again, if that process fails, once again, for competing deadlines, it's that process will continue and continue and continue until the bill gets approved on time. What we did was we worked with other payment solutions providers, which actually do facilitate batch upload payments for international suppliers, which is very helpful, a lot of time saved. Separately to that as well, if FX did expire for any given reason, for example, if approval wasn't done by close of business, it allowed the approver to lock in a more relevant rate that could once again then be approved so that things could be paid on time. Otherwise, you run that risk of not paying suppliers on time and the risk of cutting off your services. So we get a lot of questions in this regard. It's a pretty common scenario we come across here where, you know, you might have, you know, a client that comes across our desk where, you know, they're a startup or a scale up. They've been traditionally partnering with a traditional bookkeeper. You know, that bookkeeper might have just Xero that they use, maybe one or two apps potentially in the stack to help with a bit of growth. But as the business begins to hypergrow, the sort of transactional level of that's required to be captured in a given time means that the bookkeeper's sort of bursting at the seams. That business is faced with a decision at that point in time, right? What next? You know, do you internalize your finance team, right? Do you move away from a bookkeeper and bring in a finance team? The finance team's expensive. Generally speaking, it's probably a minimum investment of $200,000 plus. You might not have that capital up front. So what I normally challenge clients in that front is, okay, maybe have a look to see what the key problems or the root causes of the problems are when it comes to that bookkeeper person bursting at the seams. Can you solve those problems with an adequate app solution, right? Because rather than investing in additional headcount, it's generally cheaper to invest in a subscription instead. If the answer to that is yes, and you have one already, the question you should probably ask yourself is, has it been set up properly? Now, just like Xero. So Xero, just because you buy it doesn't mean your accounting gets done. You've got to set it up properly, and then you've actually got to put the information through. So setup is very important. I think when it comes to as well, I guess at that point, if there's still, the answer is still yes, and you're still bursting at the seams, then yes, maybe there is a need to grow your team. Now, once again, you could look at internalizing. Here's the shameless plug from Incorp. Maybe consider outsourcing instead. If you are hiring an internal team, you then become accountable to them, right? When that team member, if a team member burns out, leaves, quits, goes on leave, you've got a lot of financial processes you still need to do. If you've got backups within the team, that's great. But if you don't have the money to afford backups, then you might have a problem. When you look with outsourcing, we're putting together teams where we do have backups. So you do get that continuity of services. That brings me to the end of the webinar. I'm going to flick across to questions just in case there are any. So thank you for those. I think there is a question box. I did forget to ask anybody to put questions through the box. But I've got a few already from some of the team. So thank you for your questions. The first one I've got here is, how do you manage data security and compliance of sensitive financial information across multiple platforms? I think that's the beauty about Xero and its app platform. What you're doing in Xero when you use other apps is you do your work in those other apps, which make it easier with the automations and the like. You don't have to find a way to get that data through by exporting, Excel spreadsheets or anything like that to then re-import into Xero. What these apps do is they effectively just have a throughput of information directly into Xero via an API. It's basically a private tunnel that nobody else gets their hands on. So that data is secure as the work is being done from app into Xero, which is very helpful. And probably in my view, alleviates the need for, I guess, any sort of additional compliance on that front. So thank you for your question. Thanks, Aaron. We have established internal processes, but looking at new tech platforms. Do you help with the change management or training, or do you manage it end to end? Great question. So I think when it comes to implementing apps yourselves, of course, you can have a go at doing it yourself. I would normally tell you, though, it would obviously be best to reach out to your accountant or a solutions provider in this space, which we do assist with. We definitely like to be engaged up front. We like to, I guess, identify the root causes of problems and then obviously come up with the right app and tech solutions to facilitate the solutions to those problems. We can then obviously onboard it with you, assist with change management and training too, and even go so far as to, I guess, continually manage those apps, obviously as well do the work if required on those apps too. If you were to come to us with an app stack that's already there, I would probably, if you come to us and you've set it up already, if you've got a stack that's not quite fit for purpose, it's a little bit like putting a square peg through a round hole. It might not work. We might have to then break down what you do and then, I guess, go back to the start, identify those root problems, and you would have wasted time, valuable time up front trying to solve a problem that maybe the solution wasn't really there to sort of work with. So I think, wherever possible, it would definitely be best to be upfront with us, come up to us with a solution up front. I also pay 400 invoices a month. I currently do it manually. What would be the general cost to set up and then run an automated system? I guess it depends if you do it yourself versus, I guess, engaging a team like me. I think it will come down to, I guess, what you need to get out of the system as well. Like, for example, do you want to report the expenses you pay across multiple divisions because you report on multiple divisions? Are you okay just having it in, just a single, like, this is the company and all the bills just go through that company? I think it depends on your structure, effectively. It can cost you less than, for example, $10,000 to set a lot of this up. With a lot of these apps that you can look at, I guess, some of them can do the onboarding for you as well, which can be advantageous. Some of them do it for free. But if you don't, you can look to work with us as well, I guess, to set that all up. But yeah, I guess depending on what you need, you could do it for less than $10,000 for setup. And then the subscription cost itself work to a sort of $100 per app per month sort of thing. So if you have maybe like 2 or 3, that's $300 a month. I guess I would definitely say it's probably a lot more cost effective than an ERP. I think for those of you who don't know what an ERP is, they can cost up to $20,000 to implement, probably more. And then the maintenance cost or the subscription costs are far higher than $300 a month. So yeah, thanks for your question. How long would it take to get this expense invoice process up and running. Okay. The example I gave prior, if that's what we're talking about, that was it sort of happened over multiple stages. We didn't quite start at 400. We sort of started at close to 100 to 200. That business then went multinational, at least with its suppliers. So it sort of happened over phases. But what I will say is, I think if I had this problem faced now, we could probably do it in less than 3 months. It would also depend on complexity too, based on, once again, sort of what countries you're transacting in, how many divisions do we need, will your team sort of be able to participate with us? Like how would the change management work with your team? Do they have the ability to work with us to get to that point where they, for example, approvers, are they able to pick up that approval system quite quickly? Do they need further training? So I think it depends on the timing and the ability of your team. But yeah, we could have done that in less than 3 months if we have the right team in place internally. So yeah, I think that's all the questions we've got at the moment. If anybody wants to reach out, our contact details will be part of this presentation as well. So thank you, everyone. Once again, if anybody's got anything they need from us in respect of this, don't be afraid to reach out to. So thank you. Take care, everyone.